Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 15th of May. Much has been talked about a US recession, and we're starting to get some ideas that perhaps the world's largest economy is rumbling in that direction. By the same token, it seems that the aggressive Federal Reserve interest rate hiking policy may have started to take some real effect. We saw rather lower than expected growth in both consumer price index and producer price index numbers during the course of the week, and also an increase in jobless claims, which suggests that perhaps we could be slowing down in the US economy. Of course, what this leads to is investors expecting that there will be no rate rise in June, although equally there is scope for disappointment. Investors are actually pricing in some rate cuts by the end of the year, and that very much remains to be seen. It's certainly against the Fed's current mantra of higher for longer. We'll have to see how deep that recession is if it comes. That being said, the main indices have pretty much been able to remain in positive territory. Fairly pedestrian 0.5% rise in the year to date for the Dow Jones. S&P 500 is up by 7.6%. Nasdaq still the star performer, up by 17.8%. And our own FTSE 100 is up by 4%. Turning to next week, there's a few things of interest to look out for. We're due some full year numbers from Burberry. Shares have certainly been on a run of late. Over the last year, they're up by 66%. A couple of things playing into its hands. Number one, of course, is the fact that even in these difficult economic times, the fact that Burberry is high-end retail means that its typical consumer tends to be less affected by economic noise. And of course, the reopening of the Chinese economy has also been a major boon. It's a very important market for Burberry. At the same time, its marketing innovation continues apace, and we'll see what their outlook is, and indeed a confirmation of their current trading. Also, half-year numbers from EasyJet. Recently, they've had quite a good run. Shares are up about 19% over the last 6 months, although over the last year they're fairly flat. We've seen from other airlines that passenger demand is starting to get back to pre-pandemic levels. Some of those clouds beginning to clear for the airlines. So look out for revenues, particularly ancillary revenues, which are becoming increasingly important for airlines, where they charge for extra foot room and baggage and all the rest of it, and food indeed, which is an important part of their revenues. Capacity, we'll be seeing what sort of levels EasyJet is currently flying, and of course, let's see what their outlook is in terms of demand, both for the summer but also for the rest of the year. A couple of sectors to watch out for, differing but difficult challenges at the moment in the telecom sector. So we're expecting full year numbers from both BT and Vodafone. And although house builders and general property has been in the news of late, we'll get a much better feel for the commercial property sector. A couple of FTSE 100 companies reporting full year numbers, namely British Land and Land Securities. Thank you for watching. Have a great week.